Smokers, this ain't no jokers. Look at that stock market today, guys. Oh my goodness, the stock market is falling huge. We're going to talk about why the stock market is going down so much in this video. I'm going to share some stocks to watch with you guys. Some stocks that I believe are getting at very, very interesting levels out there, okay? So first off, the Dow. Oh my goodness, look at the Dow today. It is down around 1,000 points as of recording this. Now, as of some points here today, the Dow has been down more than 1,000 points. We'll see where the trading day shakes out. I'm recording this video slightly before the market's going to close, so we'll see where it all trades out, but nearly 1,000 point downward move here for the Dow as of recording this, okay? S&P 500 down about 3.2%, and the NASDAQ down over 3.63%. NASDAQ seems to always get either the best of it or the worst of it. When the market goes up, the NASDAQ tends to outperform to the upside and tends to do better than the Dow and the S&P 500, but on the flip side, when we have a bad day like today, generally the NASDAQ does even worse than the Dow and the S&P 500. That's just the way it is. It all started in Europe last night. I mean, the European markets were very weak, obviously on the coronavirus situation. The DAX was down 4%. The FTSE was down 3.3%. The CAC was down about 4% as well, okay? Now, why was this? Well, stocks fell sharply on Monday with the Dow Industrial Average losses reaching 1,000 points. The number of coronavirus cases outside China surged, stoking fears of a prolonged global economic slowdown from the virus spreading, okay? It was the biggest percentage drop for the S&P 500 since October of 2018, and it was the biggest Dow point drop since February of 2018. The Dow and S&P 500 also gave up their gains for 2020. So as of right now, at least the markets are negative for 2020, okay? Now this gentleman here, Larry Benedict, okay, he says the second largest economy in the world is completely shut down. People aren't totally pricing that in, adding a 10 to 15% correction in stocks may be starting. He also said some parts of the market, particularly large cap tech stocks, appear to be overowned. It seems like there's much more to come, he says, okay? Now, if we look at the Dow, even after the big drop today, which is, 1,000 points is a lot for the Dow, even after a 1,000 point drop, the market's just back to where it was, like basically at the beginning of December. So it's just like 3 months ago the Dow was here. So it's not like this is some dramatic drop that like we're down to like a multi-year low or a 52-week low or something like that. Not any stretch of the imagination. We're literally just back to where the market was just back in December. Now, in terms of oil prices also fell 5% today as well. I mean, when the oil markets tend to get hit that bad and there's that much negativity, generally the market gets hit and vice versa. We also saw Goldman Sachs go ahead and cut their U.S. first quarter GDP forecast. Goldman Sachs lowered its U.S. growth outlook for the first quarter as the domestic economy takes a hit from the global outbreak. The bank slashed its U.S. GDP growth forecast to just 1.2% from 1.4%, seeing a more severe drag from the epidemic. That growth rate is drastically slower than the 2.1% increase in the fourth quarter and 2.3% for the full year of 2019. The risks are clearly skewed to the downside until the outbreak is contained, says Goldman's chief U.S. economist. An increasing amount of companies are suggesting potential production cuts should supply chain disruptions persist in Q2 or later. So Goldman Sachs is very pessimistic here in the short term when it comes to GDP outlook, whether we're talking over the next quarter or two or just this year in general. And it's pretty much all because of obviously the coronavirus, okay? And my goodness, you go to the CDC's website and that thing just looks scary, man. That thing just looks scary. I just don't like the look of it, okay? And so when you have this coronavirus, and then you have, things like I've been talking about for the last couple weeks on the channel. I did this video a few weeks ago. It's called, Is the Stock Market Going Up Too Fast? Are Stocks Overvalued? I put out a video a couple weeks before that, which was probably within the last month, and it was called Big Problem I Found in the Stock Market. Let me explain. And in those videos, I go into talking about PE ratios and how PE ratios were the most elevated, in a long time. Let's put it that way. Even after this huge drop here today, okay, the PE ratio is still over 24. But keep in mind, it was pushing up well over 25 in just the past month or so. And if you look at the past 10 years, the PE ratio was the highest in the past 10 years. And that's just not a good sign, okay? That's just flat flat out not a good sign. When you've had a long economic expansion and you have a PE ratio that is higher than it's been in literally like modern history, like the last 10 years, it's just a negative sign, and eventually that PE ratio has to come down, okay? And so it's at a 24.3 roughly today or something like that. I think honestly it needs to come down to a 22 or 23 range. I think that would make a lot better deals out there in the market. I think you would get a lot of investors that have been on the sideline a lot more interested in this market. But when you're pushing over a 25 like the market has been recently, it's just not the type of market that makes people say, I've got to go buy stocks. There's deals all over the place. It's just not that type of market when you get over a 25. So I think a 22, 23, so I would love to see some more weakness in the market for the remainder of this week and maybe even into next week so we get some deals. So as I stated in those videos the past month or so, there are not a lot of great deals in the stock market. Most stocks are overvalued. And when you get in a stock market where most stocks are overvalued, that's not a market where you want to flood money into. And that's why I've been very heavy cash going into 2020. And I've been very disciplined with my buys so far in 2020. I haven't been flooding a ton of money in the market because I'm looking at the market in general and it's just trading very richly lately. And so we got a big hit today. I'm hoping for some other big hits for the remainder of this week, maybe into next week, bring down those P's a bit, and all of a sudden some deals, some real deals will start emerging in the market. But when you're over a 25, you're pushing up toward 26 like it had been very recently, it's just not a great market situation to be in. If you're a value investor, someone who's looking for great deals out there, whether it be value stocks, dividend stocks, or growth stocks, okay? Now, even the great almighty Tesla is taking a big hit today, okay? My Tesla's down 7%. You know it's a rough day in the market when you see Tesla down 7%. Oobity booba stocks down 7% today, or almost 7% today. Those two stocks have been very hot the last 3 to 6 months. Those stocks have been performing very well, especially in Tesla's case, obviously. And so even those stocks have taken a big hit today, okay? So now let's go ahead and talk about some stocks to watch. Some stocks that I'm paying attention to out there that, in my opinion, represent some good value out there. Some of these stocks were already kind of a good value, which even in an overvalued market or a market where a lot of stocks are richly valued, you'll still be able to find some great deals in the market. And that's the beautiful thing about individual stock picking. Whereas if you're just investing in an index fund all the time, in the markets, let's say highly overvalued, you're just investing into a ton of like very overvalued companies. But if you're an individual stock picker, the great advantage to that is you get to pinpoint where the opportunities are in the market. And it doesn't matter if you're in a bear market, bull market, or something in between, there's always some phenomenal deals you can find out there in the market. So some of these stocks were already a deal, and now they're getting to be a better deal, okay? Good old ticker symbol FB. This one is very intriguing to me. Anytime this drops under 200, it's like stealing money, in my opinion, if you've got any type of like 3 to 5 year outlook on the stock market, okay? Facebook under 200, stealing money, and here we are here today under 200. Even in the low 200s, this is still an extremely good value in my opinion, but anytime it dips under 200, that's when things get really intriguing for ticker symbol FB on that one, okay? Good old CCL. I went ahead and I bought some of this one today in one of my private accounts. I think I bought like $10,000 worth or so, and this is one I'll continue to buy as long as it shows weakness, which everything in the coronavirus is causing a lot of weakness through the stock right now, okay? CCL has been damaged heavily by the coronavirus. Obviously, we know all the players in that market. The cruise industry have been hit lately. I mean, the travel industry in general, but especially the cruise industry. And CCL, they're not nearly as reliant on Asia as a lot of the other players. However, they're going to get dragged into it. It's all a bunch of negativity around the whole space that creates a tremendous buying opportunity for someone like myself that has a multi-year outlook of 3 to 5 years when we have something going on that's negatively impacting earnings for the next 3 to 6 months, okay? I'm thinking about the next 3 to 6 years. People are thinking about the next 3 to 6 months. That stock's trading down and down and down. I will continue to be a buyer of that one as it goes lower, if it continues to go lower. And if it doesn't, it doesn't, but I will continue to be a buyer there, okay? I think iRobot now represents some interesting value. Anytime this one drops under $50, I start getting very intrigued. And iRobot here today, after the 7% downward move with the market huge today, it is now under $50. It's trading at about $48.50. So in my opinion, iRobot represents some pretty interesting value in the market here, okay? Good old Winning Resorts. You guys know I've been invested on and off in Wynn Resorts for many years now. I'm currently invested in Wynn Resorts, and I might go ahead and buy some more Winning Resorts as As I stated once again, this is a stock that I have a multi-year outlook on, as with all my stocks, but it's another stock that's get caught into the coronavirus right now, the negativity out of China, even the properties in Macau have been closed, and I think this is one that will probably continue to be dragged down in the short term, but I have a multi-year outlook on this. I think this is another great play for the long term. In terms of Wynn Resorts, the stock trading at 122. Anytime it trades under 120, I am usually a buyer of this stock, and anytime it trades under $100, which I don't know if it'll get under $100, but anytime it trades under $100, it's another one of those stocks that's like stealing money if you have any type of multi-year outlook toward a stock like this. So I'm hoping this one continues to be weak. I'm hoping it trades under 120. I'll start adding more shares, and if it was to ever go down under $100, be on the lookout. I'll be buying big on that one, okay? Foot Locker. I think Foot Locker represents a good value here, okay? Foot Locker, this one's pretty much a pure domestic play in the United States, and when it comes to Foot Locker, we're looking at a stock that is down over 4% here today with the markets. I love Foot Locker from the perspective of the business model is pretty dang consistent despite being a mall-based retailer, which a lot of those retailers are in a very tough place right now, but Foot Locker continues to do very well with their Foot Locker brand, their Champs brand as well. A stock that has a dividend yield on it of over 4%, a stock that has a payout ratio in terms of dividend of 32%, very low. So in my opinion, Foot Locker represents some very interesting value here, okay? A new investment of mine that I started buying within the past month or so, Revolve Group, ticker symbol RVLV, which is an online fashion retailer, okay? In terms of Revolve, you guys have probably seen them on Instagram all the time. They use influencers very well on Instagram, okay? And in terms of Revolve, this is a stock that's trading down 9% today, okay? The last time I checked, people can still buy stuff from their smartphone and buy stuff from their iPad and buy stuff from their computer, which is Revolve's business at the end of the day. It's not like this is like a travel business, something that could, be affected from the coronavirus in a very, very negative way. Everybody can still place their orders and the distributions are still all up and running for Revolve. This is a very domestic play once again, but it's a stock that's caught up in the negativity, down about 9% here today. And this is a stock that trades on a forward P basis under 30, while keep in mind, this is a business that grows revenues right now of over 20% and should likely grow around 20% or maybe even more than 20% in future years. So in my opinion, Revolve Group is a very interesting value anytime it goes under $20 a share, which obviously here today it is trading under $20 a share. I will likely be a buyer of bigger and bigger of Revolve if it continues to fall, okay? Hey, that rhymes. Revolve continue to fall, okay? The Real, this is one I've been spending a little bit of time on recently looking into. Haven't bought this one yet, but I will say it's a very intriguing value around $15, especially if it goes under $15. Another smaller market cap name, it's another online play, but this one's really on the resale of like luxury goods and those sorts of things and making sure those luxury goods are real that you are getting. And so as I look at this one with the market cap of under $1.3 billion, I think it represents some pretty interesting value, and if it continues to go lower, I might be a buyer of that one. I am spending a little time on that one. I still have to look more and more into that one over the next, let's say few weeks to make sure I want to buy that one, okay? So we just talked about some stocks with some very good value, but let's talk about the $1 trillion club. Are those stocks that are in the $1 trillion club, are those stocks ready to be buys, in my opinion, okay? And I'm going to go ahead and give some passes, okay? Apple, still in my opinion, not a buy in my personal opinion. It's a stock I have no interest in buying. I love Apple. I use nothing but Apple products, love the company, but I got to pass on that one. It's a $1 trillion type company, right? So win the $1 trillion club with the other few companies, but I just don't like the metrics on it. Trailing P of 24, forward P of over 19 on a name like Apple. I'm just not a big fan of that one. It's trading at pretty much the highest valuation on PE basis that it has in years and years and years. Amazon, another member of the $1 trillion boys club, and I can't buy this one. I got to pass on this one too. It's just not a great value in my personal opinion. When you're looking at a trailing P on this one of 87, you're looking at a forward P on this one of 50. I just cannot say I got to go buy some Amazon, even as it fell 4% today. I think that one has to fall a lot more for me to be intrigued. Same thing with Apple. Then the other member of the $1 trillion boys club is Microsoft. Microsoft's another stock. I can't go ahead and buy Microsoft at a 30 trailing PE, at a 27.5 forward PE with limited growth on Microsoft. I can't go out there and buy that stock. There's another one that I have to say pass. I'm not interested in buying that one. So the $1 trillion boys club, in my opinion, are still overvalued. And if I'm looking at most of the stocks, even after today's drop, most stocks out there are overvalued. So I think we need some more pain in the market over the rest of this week and maybe even going into next week to get a lot of these stocks to more fair valuations and a lot of these stocks to become undervalued. I shared some stocks that I believe are undervalued. So I hope you guys enjoyed that. As always, smash the thumbs up button if you enjoyed today's video. And as I always tell you guys, make sure you always are keeping money on the sideline. I always preach that, especially when the market's hot and it's in a good place. Always keep some money on the sideline because you always end up getting some of these dips every few months, or at least once or twice a year. You get a big dip in the stock market, and we might continue to get one over the next few weeks. And when you get those type of dips in the market, you got to be ready to take advantage. You got to be ready to be a buyer, as I was in November, December of 2018. The markets were falling huge. There were a lot of fears about a recession, things like that. I was taking advantage. I was buying some unbelievably great companies at some very discounted prices, and we've seen what has happened since then, guys. So I hope you enjoyed this. As always, make sure you smash the thumbs up button. Thank you for watching. Have a great day. Let me know your opinion in the comment section.